Hello, everyone. Welcome to the market opening bell on Friday, June 13th. On Thursday, Hong Kong stocks experienced a pullback. The Hang Seng Index opened 143 points lower, briefly narrowing its decline to 78 points in the morning, but losses widened later to 24,002 points, closing down 331 points or 1.4% at 24,035 points. The Hang Seng China Enterprises Index fell 135 points or 1.5% to 8,729 points, while the Hang Seng Tech Index dropped 119 points or 2.2% to 5,331 points. Market turnover reached 244.4 billion Hong Kong dollars. Southbound funds net purchased 5.585 billion Hong Kong dollars in Hong Kong stocks, with significant buys in Xpeng at 767 million Hong Kong dollars, Sinovac Biotech at 437 million, China Construction Bank at 397 million, Akeso at 222 million, Xiaomi at 185 million, Popmart at 140 million, and Bank of China at 138 million. Conversely, net sales included Alibaba at 1.64 billion, Tencent Holdings at 831 million, Kuaishou at 817 million, and CNOOC at 390 million. Notably, southbound funds have bought Sinovac Biotech for 4 consecutive days, totaling 2.297 billion, while selling Tencent for 10 days, totaling 12.032 billion. Alibaba for 4 days, totaling 4.133 billion, and Kuaishou for 3 days, totaling 1.799 billion. Technically, the Hang Seng Index tested the 24,000 point level again. A break below could see it target the 10-day moving average near 23,800, followed by the 20-day moving average around 23,650. In mainland China, the Shanghai and Shenzhen markets saw narrow fluctuations. The Shanghai Composite Index edged up 0.3 points to 3,402 points, while the Shenzhen Component Index fell 12 points or 0.1% to 10,234 points. Combined turnover for both markets was 1.2717 trillion yuan, up 16.3 billion yuan from the previous day. The renminbi central parity rate rose for the third straight day, hitting a 2 month high of 7.1803 against the US dollar, up 12 pips from the prior session, marking its highest level since April 2nd. In company news, Chow Tai Fook Jewelry reported its full-year results, ending March 31st with revenue of 89.656 billion Hong Kong dollars, down 17.5% year-on-year, attributed to macroeconomic challenges and soaring gold prices, dampening consumer demand. However, second half revenue rose 27.5% to 50.249 billion Hong Kong dollars. Net profit declined 9% to 5.916 billion Hong Kong dollars due to losses from revaluing gold loan contracts amid volatile gold prices. Though second half net profit grew 33.8% to 3.386 billion Hong Kong dollars. Earnings per share were 0.59 Hong Kong dollars with a final dividend of 0.32 dollars per share, up 6.7% year on year, and a full year dividend of 0.52 dollars per share, down 5.5%, yielding approximately 4%. The company operated 6,644 retail outlets, down 12% year on year, including 6,501 in mainland China, down 12.2%, and 70 in Hong Kong, up 2. Same-store sales fell 19.4% in mainland China and 26.1% in Hong Kong, Macau. Though declines narrowed recently, Chow Tai Fook targets single-digit same-store sales growth this year, while last year's margin growth was driven by rising gold prices. Slower price increases may slightly reduce margins, but cost controls to ensure stability. The company plans to open around 20 new concept stores in mainland China and Hong Kong, with its 5 existing new concept stores outperforming regular stores by 30% in per-store sales, validating its brand transformation. Future expansion will focus on high-potential regions like Dubai, Thailand's premium malls, and Australia. Zhou Liu Fu's jewelry recently passed its Hong Kong EX listing hearing, its fifth attempt in 6 years. Founded in 2004, it operates 4,129 stores with 4,034 or 98% being franchised, including 4,125 in mainland China and 4 overseas. By store count, it ranks fifth among Chinese jewelry brands in 2024, down from fourth in 2023. The company plans to open 12 new self-operated stores this year, 13 in 2026 and 15 in 2027, totaling 40. Its revenue for 2022 to 2024 was 3.102 billion yuan, 5.15 billion yuan, and 5.718 billion yuan, respectively, with profits of 575 million, 660 million and 706 million, achieving growth despite challenges. However, gross margins declined from 38.7% in 2022 to 26.2% in 2023 and 25.9% in 2024. Ping An Healthcare surged 10.8% to 8.11 Hong Kong dollars, hitting a 3-month high since March 13. On June 10th, it launched a 7 plus N plus 1 AI medical product matrix in Shanghai, covering full scenario, full cycle, and full ecosystem healthcare. Its Ping An Core Medicine enhances complex disease management and streamlines medical record creation, consultation references, and rehabilitation plans, boosting doctor efficiency. Additionally, a policy from 7 ministries targets full digital transformation of major pharmaceutical enterprises by 2030, accelerating AI-driven drug development. In the US, stocks dipped then rose on Thursday. Trump's comments on imposing higher tariffs on certain countries' imports raised concerns about supply chain disruptions, but tech strength lifted the S&P 500 and Nasdaq to record closing highs. The Dow gained 101 points or 0.2% to 42,967 points. The S&P 500 rose 23 points or 0.4% to 6,045 points, and the Nasdaq added 46 points or 0.2% to 19,662 points. The Nasdaq Golden Dragon China Index fell 30 points or 0.4% to 7,437 points. Nvidia rose 1.5%. Microsoft gained 1.3% to a record 478.87 US dollars. Apple edged up 0.2%. Amazon ticked up 0.02%. Meta dipped 0.1%, Alphabet fell 0.9%, and Tesla dropped 2.2%. Microsoft's market cap stands at 3.56 trillion US dollars. Nvidia's at 3.54 trillion, with Apple, Amazon, and Alphabet ranging from 2.98 trillion to 2.13 trillion. Boeing fell over 4%, dragging the Dow after a serious accident involving an Air India operated Boeing plane caused casualties. While responsibility is unclear, concerns over regulatory scrutiny and legal risks weighed on the stock, with United Airlines and Delta Airlines each down over 1%. U.S. initial jobless claims for the first week of June were 24,800, unchanged from the prior week and above expectations of 240,000, marking the highest level since early October 2024 and signaling early labor market softening. May's PPI rose 0.1% month on month, below the expected 0.2%, with core PPI also up 0.1%, well below the forecasted 0.3%. Year-on-year PPI increased 2.6% in line with expectations, while core PPI inflation slowed to 3% from 3.2% against a forecast of 3.1%. Despite potential tariff pressures, inflation remains moderate, strengthening expectations for a Federal Reserve rate cut, possibly in September. Our stock pick today is Akeso Inc. Stock code 9926. Akeso Inc. is a biopharmaceutical company dedicated to the research, development, production, and commercialization of innovative antibody drugs. Since its establishment, the group has built an end-to-end comprehensive drug development platform, ACE platform, covering fully integrated drug discovery and development functions, including target validation, antibody, drug discovery and development, CMC process development, and GMP-compliant manufacturing. The group has also successfully developed bispecific antibody drug development technology, which overcomes three major CMC challenges in developing and producing bispecific antibodies: one, low expression levels; two, process development hurdles; and three, antibody stability and druggability. The group has over 50 innovative projects in its pipeline, spanning multiple fields such as oncology, autoimmune, and metabolic diseases. Among these, 6 independently developed products have been approved for marketing. 2 are under NMPA review for market approval. 12 products are in pivotal phase 3 clinical trials, and 12 are in phase 1-2 clinical trials. In the pipeline, 15 are potential first-in-class or best-in-class bispecific, multispecific antibodies, or bispecific ADCs. In the oncology field, cadonilimab was successfully included in China's national reimbursement drug list in November last year for the indication of relapsed or metastatic cervical cancer in patients who failed prior platinum-based chemotherapy. Additionally, cadonilimab has been evaluated for 20 indications through combination therapies, with 28 clinical trials conducted across tumor types such as cervical cancer, gastric cancer, lung cancer, liver cancer, and esophageal cancer. Ivonescimab's new drug application was approved by the NMPA in May last year for the indication of ivonescimab combined with chemotherapy for EGFR mutated, locally advanced or metastatic non-squamous NSCLC progressing after EGFR TKI treatment, marking it as the group's second core bispecific antibody drug to enter commercialization. In November last year, this indication for ivonescimab was successfully included in the latest national reimbursement drug list. Currently, ivonescimab is available in major medical terminals across all provinces and cities nationwide, receiving widespread prescriptions and positive clinical feedback. Ivonescimab has been evaluated for 18 indications through combination therapies, with over 27 clinical trials conducted, including 12 phase 3 trials and 7 head-to-head studies, covering tumor types such as lung cancer, biliary tract cancer, head and neck squamous cell carcinoma, breast cancer, colorectal cancer, and pancreatic cancer. In non-oncology fields, the group has strategically developed pipelines in metabolic and autoimmune diseases with significant commercial potential, with products entering the harvest phase. In September last year, the NMPA approved ivonescimab's new drug application for treatment of primary hypercholesterolemia, mixed hyperlipidemia, and heterozygous familial hypercholesterolemia. Recommended buy price 94 Hong Kong dollars, target price $105, stop loss $89. I do not hold the aforementioned stock.